Everyone, if you are someone holding AMC stock and you bought around a high price and currently looking at where this closing price today was at, we're talking about what, 20 and some change. Well, if you bought over 20 or in the 30s or in the 40s and you haven't had a chance to average down since, then yeah, you bought high. But I want to bring you some news that are going to give you a little bit of expectations, a little bit of hope. I know it's not easy seeing the share price of a stock you own losing 20% in less than 5 days. Yes, I know it hurts, but we've been here before. You will think it wouldn't hurt as much, which for some people it kind of does because they are mentally strong up here, but all of us are not built that way. And that's why it's important to kind of remind people about the bigger picture, all right? So let's just look closely at one thing here. The market today did not really do well, and this is the second day in a row that the market is closing in the red, and this was kind of expected because anytime the Federal Reserve's meetings is disclosed to the public, the market tends to fall back a little bit or much, depending on how surprising the information they might find on those minutes. So the Federal Reserve, met last month, all right? Now we have the minutes. When they meet, the meeting is broadcasting, but people don't have the details, all right? Because some part of the details are captured in those minutes, all right? So now that the market is looking into it, there is something I want to point out in these minutes, what the Federal Reserve is about to do, that is explaining based on the market conditions and the market price action today that something is about to happen when it comes to the short sellers holding AMC stock, and this is definitely a good news, especially if you bought at a higher price. Let's deep dive. Let's dive deeper into the details of this. The Fed lays out tentative to plan on shrinking the balance sheet by $95 billion a month. At some point, this was $60 billion a month. But if you don't know what it is in plain simple English, when the pandemic started, the Federal Reserve decided to start buying mortgage-backed securities, all right? That was a way for them to stimulate the economy, all right? On top of all the other type of money that was printed out of, the money machine, all right? Now, because inflation is now getting a lot more higher than they expected back then, all right? And the job market, it's literally at a place where they consider it to be strong. Now it's time to make sure they get this inflation thing under control, because this is one of their major priorities at the central bank, all right? So the market was already expecting the Federal Reserve to do something about inflation, and last meeting, they already announced that every single month, pretty much every single time we meet, meaning every single month, we're gonna probably have an increase of interest rates from about 25 basis points. That is 0.25%, all right? But when people are looking at the minutes today, they actually discover that, you know what, man? We missed something, we definitely missed something. And that's why now they've kind of come to this reality of the Federal Reserve might plot to start shrinking the balance sheet in May. Initially, they thought that this was to be started in July. So not only it's sooner, but it's going to be stronger than expected, because now we're talking about a 50 basis point. That is 0.5%. And again, given when the CPI data is going to be published, I think the next time, which is probably very soon. Well, if it gets a lot more higher than expected, which I believe is going to be the case, because since the Russia and the Ukraine conflict started, things are definitely messy when it comes to oil and food costs especially. And those are the two main drivers of inflation calculus on the consumer price index, all right? So the bottom line is, because there is a surprise effect here about what the central bank needs to do or must do, because this is a must. 5 months ago, 3 months ago, they thought, well, maybe we can still kick the can down the road. But as things are getting messier and messier, especially after the Ukraine conflict, now it's time to act, and they need to act fast. And that creates a surprise effect. By creating a surprise effect, you had, this kind of market price action we had today. all right, especially with tech stocks. And I constantly keep telling you guys that the tech stocks are the ones that are mostly composed of the hedge funds major favorite positions, as these are dropping, and because money is getting a lot more drier and drier, meaning the liquidity is gone. If the Federal Reserve is now increasing interest rates, literally it means that it's not going to be easy for the short sellers to continue to do what they used to do the last 3 months, the last 6 months, the last 8 months. You kind of see where this is going. So if you kind of point this to the AMC stock chart, we've been coming back down since the last 8 months, right? So what hedge funds and the hedges and the shorts used to do back then, moving forward, especially starting potentially by the end of this month and definitely May, the environment on one side of things is getting way more difficult, way more tighter, because conditions are tight. And when conditions are tight, man, it's difficult to continue to play with that kind of money, especially being on the short side of things, all right? Because money is expensive. So how are you going to continue to sustain and hold that position? Initially, they thought that they could go on forever. I mean, ever and ever and ever with this. But now it seems like, man, if the Federal Reserve continue to increase interest rates at 0.5% every single month, man, by the end of this year, it's going to be chaotic for anybody here holding that kind of debt, because they hold a certain level of debt in order to sustain those short positions. That's why the price is not going where it is supposed to go. But that is going to change. And that's why, as an AMC holder, especially if you have an average cost price, which is really high, this is a good news for you. So just give it a little more patience, because otherwise, I mean, by doing so, in the next, maybe 2 to 3 months, definitely you will start to see some change. At least that's what I believe, all right? So let's see how it holds.